Now, what we can see is the institutions are changing. So we went from retail to institutional. We can see that there's $85 billion flowing into the market right now. This is the institutional money. So for example, BlackRock has the largest Bitcoin ETF. In just the last 14 days alone, $4 billion has come in just to Bitcoin. $4 billion. We have $85 billion that have come into Bitcoin, just Bitcoin, year to date. We can see this is pension funds that have billions of dollars of allocations. This is sovereign wealth funds. These are nations that are bringing money in. We have giant corporations that are bringing money in. We have all these ETFs like the BlackRock ETFs coming in, and they're all bringing money into Bitcoin. So what we're seeing is a complete explosion of performance. These Bitcoin derivative companies, these Bitcoin Treasury strategy companies are completely crushing traditional markets. Altcoin markets, traditional markets, and even Bitcoin itself.
Mark takes a step back to examine Bitcoin's performance over the past 5 years, and the numbers speak for themselves. Since 2018, Bitcoin has surged by an incredible 1,554%. Despite extreme volatility, crashes, and euphoric rallies, the long-term trajectory remains undeniably upward. As both a store of value and an investment asset, Bitcoin has consistently outperformed nearly every traditional market, and according to Mark, that's just the baseline. The real story is still unfolding.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
Let's zoom out, and let's zoom out about 5 years, okay? We're gonna use this time frame. During the last 5 years, this is a chart of Bitcoin priced in US dollars. It's up 1,554%. So if you would have bought it here in 2018 and held it this whole time, you would have made 1,554%. And of course, it went up and down and up and down, way up and down, way up and down, up and down. And it's a volatile ride, but it's obviously, as you can see, it's trended up, okay? Let's establish that first. Now, what are we talking about? Well, we're talking about, let's look at some of the other things. Now, the king of alts, the one that everybody's watching right now for alt season. If Ethereum moves, then alt season is back. We can see from its previous all-time high right here, it's currently down 49%, about half of what it was at its previous. Of course, Bitcoin is making new all-time highs continually, and here Ethereum is down 50%, 49% priced in US dollars. Understand that, okay? We're gonna come back to that. Priced in US dollars. Now let's take a look at another chart. If we look at Ethereum, not priced in US dollars, but instead priced in Bitcoin, we see something completely different. Okay, this is where you have to have an open mind. If we look at Ethereum priced in Bitcoin, it's a completely different chart. We can see that Ethereum made a new all-time high here priced in Bitcoin back in 2018. And we can see that it's never reclaimed its all-time high. As a matter of fact, it's pretty much just continued a downward trend, and it's down 84% from its all-time high made in 2018. That's why we looked at that period, okay? What this tells us is it's sort of like a pump and then a dump. It never is able to reclaim back its previous all-time high, okay? This is the king of alts. This is what everybody's waiting for this to move so everything else moves. Now, what we can see is the institutions are changing. So we went from retail to institutional. We can see that there's $85 billion flowing into the market right now. This is the institutional money. So for example, BlackRock has the largest Bitcoin ETF. In just the last 14 days alone, $4 billion has come in just to Bitcoin. $4 billion. We have $85 billion that have come into Bitcoin, just Bitcoin, year to date. We can see this is pension funds that have billions of dollars of allocations. This is sovereign wealth funds. These are nations that are bringing money in. We have giant corporations that are bringing money in. We have all these ETFs like the BlackRock ETFs coming in, and they're all bringing money into Bitcoin. Why is that? Well, they want to deploy billions of dollars. And there's only really one asset that's going to be able to hold billions of dollars. For example, if you look at the entire cryptocurrency market cap, there's about 16 million of them listed on CoinMarketCap today. In the top 10, there's only a few of them that trade more than $1 billion per day. So if you want to deploy $1 billion, How do you do that? You can't deploy $1 billion into Shiba Inu or whatever it is. So we have BlackRock here, $4 billion in just 10 days they're trying to deploy in. We can see right here, $85 billion, doubling the amount of money they're putting in per year. We can see right here, they're pushing the cumulative inflows into Bitcoin to $44.3 billion. And again, the top 10 cryptocurrencies can't even accept that type of money, much less the other, 15, 16 million that there are. So we understand that the market has changed. We went from retail to now sovereign. So what we're seeing is a complete explosion of performance. These Bitcoin derivative companies, these Bitcoin Treasury strategy companies are completely crushing traditional markets. Altcoin markets, traditional markets, and even Bitcoin itself. Let's take a look at this. So if we look at the NASDAQ, this is not since 2018, this is just the NASDAQ year to date. What we can see is that the NASDAQ is basically flat. We had a big dip, Donald Trump's tariff scared the market, and now we're basically flat. So the NASDAQ hasn't really made any money. TradFi, we can look again, here's the S&P 500, same thing. Here's the beginning of the year. We had the big tariff scare. We're back to about even. We've made no money in NASDAQ. We've made no money in the S&P 500. Let's look at Ethereum. Not since its all-time high. Let's just look at it in the same period year to date. So since January of this year, we're down 32%. When alt season, right? We can look at another one. We can see here, this is a Bitcoin Treasury strategy company, okay? Not priced in US dollars, but priced in Bitcoin. We can see this is up 1,337% in the same period. This is what we're talking about. We're talking about crazy returns. Here's another one. You've heard me talk about this one before, Matador. It's a little company out of Canada. We can see this one's up 337% in the same time period against Bitcoin. We're talking about real money. We're talking about real big moves. Public companies, public disclosure companies with real revenue.
Mark calls it what it is, a revolution, a Bitcoin Treasury strategy revolution. The playbook is straightforward but game-changing. Companies raise capital through equity or debt, convert it into Bitcoin, and benefit from two powerful forces: Bitcoin's price appreciation and the performance boost of being a publicly traded company. Holding BTC as a core asset, this is how MicroStrategy outperformed even Bitcoin itself. It's how Metaplanet and Matador are leaving traditional markets in the dust. And it's why institutional capital isn't chasing altcoins. It's targeting these high-leverage Bitcoin proxies that combine corporate structure with unstoppable monetary momentum.
Now, the new asset class that's popped up is the MicroStrategy blueprint. All right, this is changing everything. It's the most exciting part of the market right now. So MicroStrategy was a company, it was a software company by Michael Saylor. I've talked about them many times. Of course, you know about them by now. But what they did is they started a Bitcoin strategy, and they went and changed their name from MicroStrategy to Strategy. And now they're teaching that same strategy to all the other companies. Now, they have grown their Bitcoin holdings. Right here, it says 576,000. As a matter of fact, now it's over 580,000. It's going up so fast we can't even keep up. 580,000 Bitcoin as of May 26. And they continue to raise billions of dollars to continue to put into more Bitcoin. And now they're taking that strategy and teaching all the other companies how to do that. Now, what's interesting about MicroStrategy doing this is it's beating Bitcoin itself. So we looked at the altcoins, Ethereum, XRP, the giants, and how they're actually losing money to Bitcoin. MicroStrategy, not priced in US dollars, but priced in Bitcoin, is actually up 278% since it adopted its Bitcoin Treasury strategy. It's up almost 3 times over Bitcoin. And Bitcoin's up, what do we say, 1,500%. So it's up above that. So the key insight is that they're not just buying Bitcoin. What they're doing is they became a Bitcoin company. They learned how to leverage the debt and equity markets to lever up the Bitcoin, which is why they get that additional yield. And there's a lot of companies doing this now. We can see that another company right here, a company called Metaplanet, has now followed their lead, and they're getting even better results. As a matter of fact, Metaplanet, when priced in Bitcoin, not US dollars, is beating Bitcoin by 677% above Bitcoin. That's like what cryptocurrency used to do. That's what Ethereum and XRP used to do, but now it's happening to Bitcoin publicly traded companies. Okay, why publicly traded companies? It's because institutional companies need real institutional plays. What we can see is this is mining companies are doing this, tech companies are doing this, service providing companies are doing this, startups are doing this, and this is really creating what we're calling a Bitcoin Treasury strategy revolution. All right, now I sort of call these like Bitcoin derivatives because I'm not buying Bitcoin directly, I'm buying a derivative of Bitcoin. I'm buying a public company that's a proxy that's supported by Bitcoin, okay? But they are real companies registered with the SEC, listed on the NASDAQ, with real revenue and with real returns. All right. So these companies are publicly traded. They're built on the Bitcoin ecosystem. They're building either on and around the Bitcoin ecosystem. They're holding Bitcoin as their treasury asset, meaning they're trying to beat Bitcoin specifically. And these are ones that have strategic focus. Now, the critical distinction is, again, these aren't crypto projects. These are publicly listed NASDAQ plays. All right, now the reason why is because institutions, if you're a sovereign wealth fund or you're a pension fund, you happen to need audited financials, you need public trading, you need real revenues, you need the company to follow like regulatory compliance. And so if you're going to deploy billions of dollars, they must follow these things. They must be real companies, and that's why we're seeing that. With cryptocurrency, what we had was white papers from who knows who. Now we have public company disclosures. We used to have no revenue. Now we have audited financials and real revenue. Again, we have real companies doing real things. So where is this going? Well, we can see the migration is happening. All right? We can understand there's different phases to the cycle. We can see the institutions are here to play. But how big are these institutions? And how much money will they bring? Well, we don't know exactly, but we can sort of take a look. So the first thing we can look at is these public companies, for example. They have to file and they have to project out what they're expecting to do. So we can look at some of the big ones like MicroStrategy or Metaplanet or Semler Scientific or Nakamoto or CEP, and we can see what they've announced as far as how much money they've raised and how much money they expect to deploy.
Mark Moss' latest message is direct and undeniable. Bitcoin is no longer fringe, it's foundational. It now sits at the heart of a fast-emerging, institutional-grade financial ecosystem. The biggest opportunities, they're not in meme coins or the next altcoin trend. They're in publicly traded companies executing Bitcoin Treasury strategies firms, delivering outsized returns with the kind of transparency and credibility that institutions demand. This isn't just a crypto story anymore, it's the remaking of capital markets.